Okay, great. So let's have your thoughts on the market bull run. We did see that market extending the bull run, like I mentioned earlier, 2.2% on top of the 3% which we saw yesterday. What are your thoughts on what we're seeing?
Well, in Nigeria, a lot of investors like to piggyback. Everybody waits for someone to come in and then they jump on board. And that's what we're seeing right now. So it's going to extend for a couple of days, partly because the push that people need to come in, they're seeing it, though it's short-lived. It's just about 2 days so far. And we expect it to go a couple of days, but not because there's a strong basis for it, only because a lot of stocks appear to be cheap and a lot of money lying around, so I might as well put it in there.
No, but if stocks, like you said, appear to be cheap, would you say you are a believer of this in this recovery?
I'm not a believer because markets should not be rising purely because stocks are cheap. The market structure, market fundamentals, administration, transparency have to be in order. When that's in order, companies too are putting out results that are believable for the most part. Then if your market rises, then everybody can say, yes, this deserves to go. But because some prices are cheap, some apparently so, some not, and we all jump in, that's not the basis for a long-term recovery.
Well, we expect that the speculators will begin to jump in, like you said. So what are your thoughts on good picks at this point? Which stocks are you looking at?
Okay, let's start with where most people in Nigeria tend to turn to, which is the banking sector. Still, at this time, there are two stocks that fundamentally we see on the valuation. In other words, we give them positive outlooks, and that's GT Bank and Zenith Bank. I'd like to point out, though, that this is just based on our expectations for their results for this year relative to their current prices. Other banks, it's either fairly valued, which is neutral outlooks, or negative outlooks at this time. Outside the banking sector, Dangote Flour is a very good one. National Salt Company is a good one. Flour Mills is also a good one, just to name a few.
All right, let's look at UBA, which is obviously in that banking space. It's in the top tier of the market. It usually is seen in the top tier with First Bank, GTB, and Zenith Bank, as you mentioned. And what are your thoughts on that counter? Because we did see the CEO on CNBC earlier today mentioning that they were going to embrace the holding company structure, given the reforms in the banking rules, which we've seen recently. What are your thoughts on how UBA will push through with this change?
It's not surprising, and that also applies to First Bank, but I won't digress. UBA is banking on its subsidiaries to take it, let's say, to the next level. It's put a lot of investment into these subsidiaries. So to suddenly go the route of GT Bank and start to sell off, divest from them, it's not going to work for UBA. A good amount of their PBT going forward is expected to come from these subsidiaries. So if they sell them, it's going to really put a chink in their armor. So definitely, it's not surprising going the holding company route.
Okay, well, I know obviously you like GTB. You talk about that all the time. But what is your rating of UBA? Because we do also know that they've raised 20 billion naira in a bond issue, and they're planning to probably raise more in a broader issuance program. What are your thoughts about that capital raising? Do you think it's enough? Do you think they need more?
It's not enough, but the question becomes, could they have gotten more? I can't really predict. I will doubt whether any bank right now can get much more than that locally, if that was the case. I will point out, though, a lot of information about that Tier 2 debt has still not yet been supplied to the market. We will say they may need more, and that's because UBA is trying to grow fast. Part of the whole model is to get bigger. Our question, which we still stand for today, is UBA growing big because it can, or growing big because it should? It's an interesting question, and they need to really sort that out. If they keep on growing big because they can, and the money is there, they're going to pay a price in the short term, mid-term, and the long term. They're growing big because they should, then let's see what the numbers tell us. Right now, UBA is neutral for us.
Well, I was just going to ask you your rating about UBA, but obviously you're cautious about the counter. So we have already talked about your top picks, but can you just, particularly in the banking space, how do you see things playing out? Because we do know that AMCON is coming into play, hopefully at some point in this quarter. Do you think that the banking sector is going to recover significantly in this quarter?
Are you referring to price performance on the exchange?
That's
or
right.
The banks health-wise? Okay, price performance, we may very well see a rally, and that's just because without the banks rallying, the market will not rally. It's just the way our market is, unfortunately. So if people want the market to move up, the NSE All Share Index, the banks have to take that giant step. So the banks may move up. By the end of the day, a lot of them will be priced higher than they deserve to be as far as this year, 2010's performance expectations are supposed to be, or from our expectations. So they'll move up, sure, but not because they really deserve to for most of them. GT, Zenith, I think definitely deserve to go up. They're way below fundamental valuation.
Okay, on that point, on that note, we really have to leave it there.